you beautiful souls, okay? Listen, I want to make something abundantly clear before I start this video. You guys need to subscribe and like the video. I'm getting all these views but no subscriptions. You guys aren't watching the full thing. I know the short attention span generation, TikTok, whatever. Screw that. This is informative. You guys, what I'm about to show you is how right I've been the whole time. So if you want to make money, just listen, okay? Like, subscribe, share. Sharing is big. We got to get the word out there. Let's talk about silver for a second. This is my favorite asset in the world. This is a silver daily chart in front of us right now. Like I just said, favorite asset in the world. And I'm about to explain why it's going to go down in the short term. Now, I'm not saying it's topping out here. It could go up a bit more. It could squeeze to even 26. But it's going down. Because look, okay, we have, first things first, we have bearish divergence on the RSI. The RSI is making lower lows as silver is making higher highs. Cool. MACD is red, bearish. That's two bearish signals. It's about to fight a key level. So when we have two bearish signals and it's near a key level or at a key level, we can assume that key level is going to get rejected and go down. So my bet on silver is downwards. It's well above the 30-day moving average, and RSI is basically saying it's overbought. And it was overbought before we got the bearish divergence. Now we have it. So yeah, silver short-term down. The reason I tell you guys this, even though it's my favorite asset in the whole wide world, is because when it goes down, I recommend buying it. Okay, that's only spot price. Premiums, I don't know what they're going to happen. Buy physical silver, not paper silver. Physical silver. It's the best asset in the world, no questions asked. Next thing, we're going to move things a bit more optimistic, okay? I said I'm pretty positive silver is going to go down, but I'm pretty positive oil is going to go up. For literally the opposite reasons of the reason that silver is going to go down. Number one, it just broke the 30-day moving average. That's very bullish. The 10-year yield did that the other day, and we're going to talk about how that turned out and how I said it would turn out. And hint, hint, it's green. Anyhow, we have a green MACD, bullish. Bullish divergence. The RSI is making higher highs as oil made lower lows. That's bullish, guys. So yeah, oil, go in, buy it. I've told you guys before I like DIG and natural gas, which we talked about. I'm going to show you guys right now. So energy in general, I like. Rejected at this level over here. This, I could draw a line right here. So we got natural gas showing bullish signals because it rejected at this level completely. Like completely. This is a hammer or a doji candle. It got there and then it rejected. Now it's probably on its way back up. And it could fill up this gap even. So energy looks like a very solid place to put your money right now. On top of that, we have the Russian news. We're going to get into that in a second. So yeah, energy, love it. Next, 10-year yield. I told you guys this was going to go up. It's going up. Around here, I said we got a long signal. We got the green MACD. We had RSI was a bit lower. Now it's pretty high. But I said if it broke out of here and broke the 30-day moving average on this day, what was it? It was around like December 22nd, December 23rd. I was telling you guys, 10-year-old's going to skyrocket. It's skyrocketing. Now, here's what you got to look out for the 10-year yield. I also told you guys to short TLT, and I promise you TLT is down. Okay? Because when this goes up, TLT goes down. Usually when this goes up, stocks go down. But the correlation is kind of weakening. Anyhow, up. So we're going to see. It's probably going to test around the 3.9 to 4% range. If it breaks that, it's going to go probably back to the 4.3 range that it was at earlier on in the year. In late October, it was around there. Now, it might not, because there's a lot of signals that are showing that was the lowest value we're going to see bonds go, and then like we capitulate, and stocks are going to take a beating, but bonds aren't. So watch out with this. I called this trade. I don't know how much higher it can go. But if it passes this red zone, so if you guys see it pass like even this point of resistance here, so it would be like around 4%, yeah, it's probably a good trade. But watch that RSI. It's going up quick, so it's getting overheated almost, right? Like, I mean, you can make the case that maybe not. Yeah, I guess there's a bit of bullish. I don't know. We'll see. Anyways, I'm not going to look at any of the major indexes, but what we are going to look at today is Apple, because it is a part of every major index and it moves markets, guys. It moves markets, okay? So Apple over here, 52-week low is 128.72, and they hit that today. Got rejected there today. But it fought the previous 52-week low, which was 129.04, as you can see right there. Okay, cool. This is gonna dictate where the market's going, guys. This right here, okay? Oil and silver are their own separate identities, but we have a red MACD. RSI is getting a little bit oversold, so those contradict each other. But if it breaks beneath this level, and it could also bounce back up, then you can bet on markets. Well, it's the previous low. It's the previous point of support. So if it goes below, you can bet on markets going down. If it goes up, you can bet on markets going up. But okay, it's also the 38.2% retracement on the Fibonacci sequence, which is big. That's a very important level. It says 132. I'm not exact. You guys get it. It's the same area. Now, if you take this line, so you grab this, that's over here, whatever. It's the difference between the high and this current level to see how much it could go down. We could end up around this. Let's go up a little bit. Okay, filling up this gap over here. You guys see this gap right here? That could end up getting filled, which is around the $90 level. That could happen when we capitulate. There's correlation saying we could capitulate very soon. I don't know. If you compare this chart to the 2008 chart and you look at them side by side, it looks like we're on the brink of capitulation. I don't think we are, but that's what they're saying. Anyways, guys, keep an eye on Apple. Apple's huge. 10-year yield, keep an eye on that. Get into energy. I like energy a lot. It looks really bullish right now, and I promise maybe at the end of this week we're going to see that. I was probably right about that. Silver, not a big fan. I mean, I love silver long term. Get your hands on some silver. Even if you buy it at 24, go for it. But I would personally wait. Maybe it hits 22 to 21. You can get it at a better price. So let's see what the economic calendar is saying this week. There was nothing really important today, so we'll skip today. Tomorrow we have pending home sales month over month. So this is going to say how. So this could go either way, right? If we see that home sales are slowing down too much, that could be bullish or bearish because people could perceive it as, okay, the Fed is doing their job and they're hiking interest rates fast enough to the point where the economy is actually feeling it. So the market could go up, or they could say, oh no, the economy's hurting. So these macroeconomic indicators are two-sided now. So we don't even know where it could go. But pending home sales, we'll see what happens. I think they're forecasting negative 0.8. Last month was negative 4.6. So I would be really surprised if we get that much of a drop or increase, actually. But yeah. Okay, cool. What's next? Initial jobless claims. This is big. So this one they want bad news. It's kind of like a bad news is good news type thing. So they want this one to be high. They're expecting 225,000. Last month was 216,000. If this is higher than 225,000, that's going to be bullish because it's going to mean the Fed is doing their job and they're doing it right. If it's lower than 225,000, and especially if it's lower than 216,000, that's going to be bearish for the market, guys. Watch out for that on Thursday at 8:30 a.m. Crude oil inventories. Important. Watch out for that. 11 o'clock. What else? What else do we have this week? Nothing. So it's a pretty slow week for news. So just watch out for crude oil inventories, initial jobless claims, and pending home sales month over month. The pending home sales is tomorrow. So Fox News is hitting us with some news. Most recession-proof jobs in 2022. Guys, we have slow news, like I said. There's nothing important. They're going to tell you be a waiter, be a waitress. Point is, these elites want you to work jobs. They implant in your head that jobs are the only way to make money. Guys, the most recession-proof job is being your own boss. It's when you employ other people, okay? I just wanted to say that as some advice. I don't care about this article. Like servers, waiters, waitress, I don't care. Be your own boss. Be the one that owns the restaurant, and then see how much a server would help you. This is probably the biggest news that came out pretty recently, 30 minutes ago. Russia bans oil sales to countries using price caps. So the G7 countries, which is like Canada, US, Japan, England, Germany or something. I don't know. I'm probably missing the rest. They like a couple months ago, they're like, yeah, we're going to do a price cap at 60. They're not paying more than $60. So now Russia's saying like, okay, we're just not going to sell to you guys from February 1st until July 1st. That's when the ban will start. And the G7 countries claim that they did this so Russia would make less revenue, like federal revenue, selling oil, and they will they won't be able to fund the war in Ukraine, and they're quote unquote protecting Ukraine. Guys, this is all just a load of shit. That's not it. That's not it at all. It's so they can bump up oil prices and make more money. They don't care about Ukrainian people. They never have. They never will. Ukraine's not even a NATO country. They have no obligation to help them. If they really cared about anything, they would just try and make peace if they actually cared about the Ukrainian people. But no, they don't. They just care about money, guys. The U.S., the United States of America, loves conflict. They love WAR. Okay? You guys know where I stand with this. You know where I stand with this. Point blank. Point is, they're going to come up with any excuse whatsoever to prop this chart right here. They want it down. Okay? They want it down. And that means they want people to buy bonds. They need money. They need any excuse to print money, to borrow money. It's a debt-based system, guys. And that's why inflation, you'll never see low inflation again in your life. And it's going to hyperinflate until the entire economy resets, and we need to make a new financial system that goes digital. And you should own XRP for that reason. Or Bitcoin. Or anything. Or gold. Or silver. But not your dog shit fiat currency. How many times do I have to say it? I don't know. Maybe you guys will listen one day. Anyhow, love you all. This is Charts and News, episode 6. Stay blessed. You guys are beautiful. And have a great day.